Imagine getting paid just for holding stocks. No extra work, no sleepless nights, no side hustle. Just consistent cash flowing into your account. Sounds too good to be true, right? Well, that's exactly what dividend stocks can do for you. But here's the catch. Most beginners either miss out completely or make one tiny mistake that kills their returns. So stay with me, because by the end of this video, you'll not only understand dividend stocks, you'll know how to make them a reliable stream of passive income for life. Let's start with the basics. Dividend stocks are shares of companies that pay you part of their profits, usually every quarter. Think of it like this. Instead of you working for money, these companies pay you for owning a piece of them. Sounds simple, right? But here's where most people get it wrong. They confuse dividends with free money. It's not free. It's your share of the profits. If the company is strong, your payouts are consistent. If it's weak, your dividends could vanish. Would you rather get $100 today or $100 every 3 months for the next 10 years? That's the difference between short-term thinking and dividend wealth. Here's why dividend stocks are so powerful. They create passive income. Imagine you own 1,000 shares of a company paying $1 dividend per share annually. That's $1,000 a year without lifting a finger. Now scale that up, reinvest your dividends, and suddenly your money is working harder than you ever could. The excitement comes from compounding. Your dividends buy more shares, which generate even more dividends. But here's the urgent warning. Not all dividends are sustainable. Chasing the highest yield is like chasing fast food. You feel good at first, but it destroys you in the long run. The key? Focus on steady, reliable companies, not flashy promises. Here's where many beginners stumble. Dividend yield versus dividend growth. Dividend yield is the percentage of return you get from dividends compared to the stock price. Sounds fancy, but let's keep it simple. A 10% yield might look attractive, but if the company can't sustain it, that income will vanish overnight. On the other hand, dividend growth companies start with lower payouts, but they increase over time. Which is better? Think of it like choosing between fast cash and long-term wealth. Imagine if your boss told you, "I'll keep your salary the same forever," or "I'll give you small raises every year." Which would you pick? Exactly. Growth matters. Now let's talk about fear. The risks you can't ignore. Dividend cuts are the nightmare scenario. When companies face financial trouble, dividends are often the first thing to go. Investors panic, stock prices drop, and your income stream dries up. Another risk? Inflation. If your dividend payments don't grow, inflation eats away their real value. Then there's the trap of dividend traps. Companies offering unusually high yields just to attract investors, but behind the curtain, they're financially unstable. Chasing dividend traps is like dating someone just because they bought you dinner. Looks good at first, but ends badly. So, how do you actually pick dividend stocks that work for you? Start by looking for companies with a strong history of paying and growing dividends, often called dividend aristocrats. These are companies that have increased payouts for 25 years or more. Next, check the payout ratio. It tells you what percentage of profits are being paid as dividends. Anything above 80% is risky. You also want to see healthy cash flow and manageable debt. Don't just look at yield, look at sustainability. And here's a cliffhanger. I'll reveal in a second why some of the most boring companies, like utilities or consumer staples, can be your ticket to financial freedom. Finally, let's talk about building your dividend portfolio. This isn't about buying one magic stock. It's about balance. Mix high-yield companies with dividend growth companies. Reinvest your dividends to accelerate compounding. Diversify across industries so one downturn doesn't wipe out your income. And most importantly, think long-term. Dividend investing isn't a get-rich-quick scheme. It's a get-rich-slowly, but surely strategy. The longer you hold, the more powerful it becomes. Imagine waking up 20 years from now with dividend checks covering your rent, groceries, and vacations. That's the wealthy lifestyle dividend investors dream of. And it's within your reach if you start now. So now you know. The truth about dividend stocks. They're not glamorous, they're not instant, but they are one of the most reliable ways to build wealth and passive income over time. But here's the real question. What's the point of earning dividends if you don't know how to manage the money you already have? That's where budgeting comes in. Don't leave yet. Watch my next video. 5 budgeting hacks you wish you knew earlier. Because if you're broke at the end of every month, even dividends won't save you. Click now and take control of your money and your future.